Hey, what's cracking, everyone? Marcelino here. So, I wanted to come to you because, as you may or may not know, I'm the kind of a person who believes that I really need to share what I some of the things that have gotten me to where I am, and just coming from a place of contribution, and whether that is um, the name of our channel is Through Failure and Success, and that is named for a reason because there has been so many. Rather than calling it failure, I like to call it, just stepping stones in life that was able to get. And for me, it's really important that some of those values that I've learned, I share those with you, so that therefore you can grab from that as well and learn from that building that stepping stone that I'm trying to build. But with that being said, in today's video, we're all across the platforms. By the way, we're on LinkedIn, YouTube, Twitter, Facebook, and other platforms that I forgot. And for me, this is important. This is about what's happening in the economy, and what's happening in the economy is through the real estate market that I want to share with you, because that is my field. But the point of this is I want to be able to share with you what just happened today. And so with that, the Fed Reserve has just literally announced that they will start raising the interest rates up. They're going to be raising the interest rates up again, and I believe that they raised them today by 0.75 basis points. That is a three quarters of a percent a point that they raised them today. Now, in the real estate market, we have seen interest rates right now at 7% on average. So that is 7% that you're seeing right now. You want to go buy a house, if you have a great credit score, great. 7% is what you're going to get. Raising the interest rates today, okay? Raising the interest rates today by three quarters of a point. It doesn't mean that the interest rate is going to go up to 7.75%. It just means that the overall index that was placed for the overall index, is going to go up three quarters of a point, meaning almost 1%, almost 100 basis points. That's what in the economy world they call it. So now, how will that reflect the interest rates in the mortgage? Well, there's an index that's going to have to follow. So it doesn't mean that's going to go up directly to 7.75%. It might go up to 7.2. It might go up to 7.3. It might go up to 7.1. It just depends on what the effect of that's going to do. Now, with that, they signal that there's gonna be more interest rates coming up, and that is obviously because we have felt it. We have felt the economy just inflating, and we are at a highest right now that we have seen over the last 40 years. And in inflation right now, it's, I believe, 8.2, 8.5%. One of the highest that we have seen, the fastest since 1982. And so why they're raising the interest rates up? Well, because the interest rates have been at the lowest since the Obama era. They have been kept at near 0% since then. And so, as you can already tell, since 2020, 2021, and early 2022, we saw the economy just accelerated. It just took off. So in order to slow that down, what do they have to do? They have no other choice but to make it more expensive for the borrower to slow the economy down a little bit. So that's what happened today. That's what we've been seeing since March of this year. And then June, July, August is when it started raising the interest rates by three quarters of a point. And then today was no exception. So how will that affect the real estate market? Well, I wouldn't necessarily call it how will it affect it, how will impact it, right? Rather, and obviously, we have seen 2020 and 2021 was one of inflation just benefited real estate by a lot, because 1% of inflation that went up, it benefited a minimum of 5% in appreciation to the real estate market world. And that is huge. That is very huge. So that's why you saw prices just starting going pretty much all over the place. People had stimulus checks. The economy was being stimulated. The government said, I'm coming to the rescue. I'm going to rescue you so that we don't go into recession. Now, many economists, 75%, actually, I was reading today, this morning, that 75% of people actually believe that we are in a recession. I'm one of those 75%, meaning that 7.5 people out of 10 believe that we are in a recession. I'm one of them. but that's up to you if you want to believe it or not. I would say do a little bit more research so that you understand what it's a recession, what causes a recession, and what is it like to be in a recession, because all the indicators are that when we experience two consecutive GDP, which is gross domestic production, when we experience two consecutive negative numbers, we're technically in a recession. And we are, and you can say whatever, you can argue however you want to. Data is the data. Okay. You may not feel it. I say that most people are feeling it right now. When you go get goods and services, you go to the grocery store. I'm sure you feel it. I feel it. You go to you go to the gas station, and gasoline is 6%, $6, $7 a gallon. I wouldn't be surprised if it goes up to $10 a gallon. But this is why the Fed has announced that they are decreasing the interest rates. I'm sorry, they are increasing the interest rates in order to decrease that. So now let me show you what happens when you start. This is a mortgage calculator, by the way. Okay. And I'm briefly going to show you how it affects a price of a home, a buyer looking to get a house. So let's just say that you have a $500,000 house. Okay. Now let's just say back in early March, February of this year, let's just say interest rates, which they were at around 3.5%, your mortgage payment was $2,245. Okay. This is early this year. Last year, same thing, maybe 3%, but this is based on a $500,000 house. That same $500,000 house, today, you would not pay 3.5%. Imagine that. This is twice as much. Okay. The interest rate is twice as much from what it was just a few months ago. Now let's just say 7%. Your payment goes up to $3,327. That is an increase of almost $1,000, over $1,000 a month that you're paying with the interest rates going up like that. So how is it a good time to buy? Do I just buy, or do I hang on? What I tell everybody is, if your financial situation makes sense for you to go ahead and buy a property, I say do it. I say do it. Just go ahead and buy a property. Now, if you're gonna go buy, make sure that, this is just me. This is how I bought my first property. This is how I bought another rental property. I made sure that I was out of debt. Okay, when I bought my first property, I wasn't completely out of debt. I had very little debt. I think I had about a credit card of $3,000. But I made sure that I was able to afford it, because I recently heard another realtor from another area saying, sacrifice, and struggle. Put your family in a situation. Basically, this is what the realtor said: put your family in a situation where you're going to sacrifice, even if it means paying, spending all of your paycheck into buying a house. Go ahead and do that. That to me was one of the worst advice that I have ever heard, because you don't do that. You buy a property when you are financially ready, when you have reserves on the bank, just sitting there waiting for an emergency to happen, because this is life, and life happens, and things are going to happen, and you don't want to put yourself in a position just because you made an emotional decision to purchase a property and you were not able to afford it. So if you're going to buy a property, do it. Just make sure that you're financially set, you're financially ready, that you can afford the payment. Okay. Because when we buy a property, we say, I can afford a $3,000 payment. Okay. When we go out and buy a property and looking for properties, we don't say, well, you know what? I can afford a 6% interest rate. That's all I can afford. Or we don't say, you know what? I can afford a $500,000 house. Maybe you look at the price, but at the end of the day, you look at the monthly payment, what you can afford, because only you can afford that payment. Okay. If you have a spouse, between you and your spouse are able to afford that payment. So if it is a $2,500, if it's a $3,000, you work from the end in mind. Okay. You work from from what ultimately you're looking to get to pay at the end of the month, the beginning of the month. What's the amount that you feel comfortable with? And if that number makes sense, then you talk to your realtor and you say, this is the payment that I'm looking for to get, a $3,000 payment. Okay, a $3,000 payment. I just showed you the example. A $400,000 house, maybe you can get that in today's with today's interest rate. $400,000 house where I live here in California, Southern California, still very doable. Some of you that may live in Oklahoma or Illinois or Alabama, which I just met somebody who went and bought a house out there. Those prices still exist. Maybe Florida, not Miami, but some other state, some other areas in Florida, you can still afford it. So, with that being said, you purchase the price that you can afford a month. Now, does that mean that you're gonna go if you see a house for $400,000? This is just my scenario that I want to share with you. If you see a $400,000 house, does it mean that you go and offer $450,000 like it was happening a couple months ago? You don't do that in today's market. You may want to reconsider because prices will continue to drop. Okay. Little by little, they will continue to drop. If somebody else says something to you or they are in denial, they don't want to accept, then you know what? Maybe you should do in research, from somebody else. Do it in research because the data is there. Okay. The next 30 days are going to be very interesting on what the economy is going to do. And real estate, housing, shelter, okay, like the Fed calls it, shelter is one of the is it covers about a third of the entire economy. So we rely, okay, it's a tripod. When you have your tripod, when you're standing your camera or your iPhone, when you're recording or your light, you have a tripod. Okay, if you take off one of those legs, if you take off that real estate leg, that tripod is most likely going to fall. We rely heavily on the tripod of real estate. We rely heavily on the leg of real estate. So, with that, is it a good time to buy? I say it is if you're financially set and if you're able to negotiate price, because this is going to be the market where negotiations are going to be have to be done on the table. Okay, it's no longer about let me list your house and I can give you $50,000 over asking. Go ahead and try that in this market and see if it happens. So negotiations, okay, $400,000 house, maybe it's going to be worth $350,000, 3, 6, 12 months down the line. You know what? I'll give you $350,000, maybe 325. Who knows? Make a lowball offer. You have nothing. I don't want to say you don't have nothing to lose because you may be in a rush, you may be in need to make a move at this current moment from your property. But with that being said, like I said, it's going to be very, very interesting to see what's going to happen the next couple months on whether we announce that we are officially in the recession, which I still don't understand up until this point why we haven't announced that. Okay, we just haven't announced it. Okay, but if you look at history, okay, there was a video surfacing out from President Bill Clinton when President Bill Clinton says, when we experience two consecutive quarters of negative GDP, negative gross domestic product, we are officially in a recession. This comes from President Clinton. Okay. Now, why are we here in the first place? Why do we see so much inflation? What's causing all of this? Well, this is the cost of printing too much money. Okay, this is not the first time that it has happened. Okay, we have seen this in the past. And it was late 1980s or 1980, 1982 when we saw inflation, higher than what we have it right now. And the if it, when you print too much money, there's a tendency of, we print money, we stimulate it to the economy. Okay, we give it out to the economy, just like you see in this video, and so therefore the economy grows. Okay, the only way that we can stop that is stop printing the money and start raising the interest rates up, which is exactly what we saw, which is exactly what got us here in the first place. Now the Fed is making it just a little bit more unaffordable for the person to go ahead and buy when you're borrowing. That is credit card, that is a car, that is real estate, that maybe whatever that is. But this is why we're here in the first place. Printing too much money, stimulating the economy, it accelerated out of control. So the only way that I can slow that down is if I'm able to raise the interest rates up, so that therefore the economy can start inflation can go back down to 2%, which right now we're at 8.5. I don't know the exact number, 8.4, 8.6. The goal is 2% every year. 2%. Last year was last month was 9%. Okay. So not 8%, 8.6%. So this is what I want to give you, because it is important for me that you are able to make a decision. And I'm only talking to those that are looking. This is not for everybody. I understand that everybody is in a different financial situation. This message is obviously not for a billionaire who is out there making decisions. There are billionaires, multimillionaires for a reason. I'm not talking to them. I'm talking to the individual, to the person that I once was. Okay. When I was looking to get into a house, and I said to myself, what do I need to get into a house? How do I get out of debt in the first place? What do I need to do in order for me to get into the real estate market, if that's something that I want to do? I'm talking to those people, the ones that are looking for ways to get into the market, because there's a lot of fear going on out there. The media is going to imprint that on you. Okay. And it's your job, like Jim Rohn used to say, okay, stand guard at the door of your mind and make sure that nothing gets in without your permission. Okay. So the media is going to be doing their job. Okay. They're not bad people. They're good people. They just have investors. They have numbers that they have to meet. So how do they do that? By inserting fear into you. Okay. So the media is going to say that this is not a good time. The economy crashed. Worse than the Great Depression, and whatever that is. It's up to you do your research, and if it makes sense for you, I say do it. Do it. Absolutely do it. Just think about the numbers that you are able to afford every month. Do not jeopardize your family. Do not put them in a position where you don't want to put them in. Okay, like the example that I was giving you, this person saying, hey, struggle for the next 6 months. Even if it means, putting all of your money into a house payment, you don't do that. Okay, you don't do that. You don't put all of your money into a house payment. Okay, you do that very diligently. And if you need support, contact your local realtor. There's plenty of realtors out there who can help you out with that. You can always send me a DM. I'll be happy to help you out. I'll be happy to connect you with one that can help you out with that. But again, stand guard at the door of your mind. That is my message. Do not let anything go in without your permission. With that, I hope that you got some value out of this video. This video is going to be on YouTube. Our channel is there. We always bring content every week. It's through failure and success. Some of the things that we have learned with personal development. But in this case, this is important to me. This is important to me because I'm making financial decisions that are helping my family, and I want to make sure that I share those with you, because it wouldn't do me any good if I'm thriving, if I'm succeeding in life, and and everything is going good for me, and I see somebody else who is probably in the same position that I was 10 years ago. That's the person that I'm looking to reach. That's you, the person who I'm trying to reach. Do not let anything get in your way. Do not let anything get inside of your head without your permission. With that being said, you're more than welcome to follow us on YouTube through Failure and Success. Thank you so much, everybody. We'll see you in the next one. Take care, everybody. Bye-bye.